it's an important thing. I really do think that like Jerry's a perfect example. I'm glad you brought that up. He every time he comes on the show, the birds in the background. Last time was the first time I actually got to straight ask him about it. I said like, hey, how important do you think it is to have a bird as a trend follower? And he was like, actually nobody's asked me that. And he was like, I think it is important. I think it's this and that. And like it was actually a very cool conversation because I think generally it's like you want to have something distracting, something that takes your time up, something that isn't stressful. Because generally, like I think the biggest problem most people have with trading is overtrading. I think overtrading is the biggest problem all traders have to deal with. And I think it's a thing you do when you're stressed out. I think it's a thing you could do whether you're systematic or not. You could start. I have so many people. I think the biggest thing they do wrong. There's a guy in our group. I actually think his instincts are completely spot on.
Yeah.
As a trader, he just front runs himself all the time. Like he'll have his signal. He'll be waiting for his signal and go, well, it's probably going to hit my signal and just get into the position. And it's like, I want to do that all the time too, but you can't.
Anything to make you more calm or zen, right? In your day to day. That's what I'm saying. Like every office needs a cat because they're just very chill, right? They're the right energy, I think.
Yes. Cats are great, a nice old dog. We have a min pin. I don't know if that'd be great for my trading. She's an amazing dog. I love her to death, but she's just wild. My older dogs though, they were great for trading. They're just chilling. They just sleep in the background. They don't do anything. Sometimes my worst thing they're going to do is come on your lap and try to get food if you're trying to eat or something.
Well, like you were saying before, it's almost like they know when the camera's on. When the red is on, this one loses it. She just has to be around and touching me or touching something on my desk or on the chair. When the camera's not on, I can't find her. She's under the bed. She's sleeping.
I wonder also with Kashop on here, do people in other countries, because I've been to a lot of other countries and I see like there's not as many people that have pets as in the States. Is it looked at like we're like kind of psychos having all these animals running around all the time?
No, not really. I think it's just, I don't know, but here in Dubai, I'm seeing quite a few people have dogs. Like
Nice.
every day I go for a walk and they're always walking their dogs in the morning, it's quite a few of them. I haven't seen as many cats, but dogs, yeah.
Nice. Yeah, we've got four. Well, sorry, one passed away recently, so we have 3 dogs, 2 cats. We're definitely gonna get another dog. I think our idea, we had a handicapped dog. They had three legs, so our idea is to find another dog with 3 legs or something. Kind of one that's a little bit tough, can keep up with the rest of them, but also a little bit disabled because kind of want to keep the tradition alive. Not to mention people are like, oh my god, it was it must have been rough with the 3-legged dog, and it's like, no, it really wasn't. He got around really well. He did his own thing. He was fast. He was super cool. So I'm excited to get another one as my dogs start freaking out downstairs.
They figure it out. Three-legged dogs. We got 6-toed cats down here in Key West. You ever heard of the Hemingway cats?
Oh yeah, been there. Yeah, we went to the Hemingway Museum. That was super cool, amazing. The Hemingway Museum is awesome. If anybody who's listening hasn't been there, you have to check it out, especially if you're an animal lover. If you're an animal lover, I think I'm a avid reader, but at the same time, as an animal lover, that was probably the highlight of it for me, seeing all the cats, and not to mention they've kept that going for how many years? The 200 years now? Hemingway was 1850s.
It's been a long time. I have no idea. I don't think it was that long. But
maybe somebody could answer that in the chat.
Is that old? I don't know. It's a big. Ernest Hemingway is huge down here. There's a lot of dumb tourist things to do. That's something I always tell people to check out when they're visiting. The Hemingway house is really nice. And you think your cat is big? Dude, the cats there, they're like tigers.
That's basically how big our cat is. Beth, can you hear me, Billy? Can you hear me, Billy? Yeah, sorry. I'm gonna get my assistant, my fiance, to hand me Billy.
Beth.
Thanks. But
what you doing? Buying energy stocks?
Cats in general. Yeah, we're talking about energy stocks and big ass cats. You know, there's our humongous cat. There's Billy. He is 20 pounds. He is humongous. He is about as big as it gets for a cat. So,
Oh, what's his name?
it's Billy.
Mr. Bill.
Yeah, Mr. Bill. Yeah. So, yeah. Thanks, baby.
Bye, Mr.
But,
Bill.
Yeah. So that's Mr. Bill. So now that we're all ready to go and everybody's met our cats, I know that's why everybody came here. So we're gonna just shut it off there. Thanks for coming. Just kidding. So let's get into it today. You know, the big thing I wanted to talk about today was this move in energy. You know, and Steve and I have talked about it as technicians.
Yeah.
When you have these type of pullbacks in the market and you see relative strength in an area, that's where you want to be. You know, Steve and I, if you haven't seen the video, Steve and I am on my YouTube channel, definitely check it out. But we talk about 2020, the semiconductors. You know, you basically watch the market crash, but the semiconductors, if you look at a chart, semiconductors SMH relative to the S&P 500 SPY, you basically see there is no pullback. You know, basically semiconductors didn't really feel much during that time. Going forward, that was a leading sector for a while. And once again, you know, if you look at late, they came down pretty hard in 2022, and then you started to see relative strength in them again coming to the end of the year in 2022 and into the beginning of the year in 23. And then they led the way for a while. Obviously, NVIDIA's crazy action is a lot of that move. But just saying, you know, the relative strength is really important. And now we're kind of seeing it finally showing up in those areas. You know, the thing I kept talking about was like energy looked really good. Steven and I also talked about the underlying commodities looked really good as well. The problem, however, was that we weren't seeing relative strength yet in the energy stocks. So finally, we're seeing relative strength in the energy stocks. I think it looks really good. I think it's quite an interesting setup here. You know, Steven, first go to you. What are you seeing here?
We're not showing charts, right? No charts. I'll describe them.
You can show charts. We can send.
I got a chart.
Let me give you. I think you should have permission. I don't think there's permission on here. So,
all right. Let's try this out. Present.
Share screen, and then.
Boom.
Oh, it got add to stage. Nice. That's cool.
So this is the little relative strength you're talking about. I don't think no, we don't have today's data in the relative trend, so the blue line. Making new whatever multi-month highs, XLE, relative to SPY today. So this ratio is at its highest level since early January, almost the highest level of the year. At the same time, this range drawn below the black line, this is just XLE on an absolute basis. We've been in this range for what, 2 years now? We're at the upper bounds, trying to break out again. We have been rejected here 1, 2, 3, 4 times already. You need that relative strength if we're finally going to get a breakout in XLE, right? So as the relative trend is scooping and scoring back into its old range, right? A little bit of short-term momentum in the relative strength line. The absolute trend is right back at, you know, the scene of the crime, trying again to finish absorbing all the overhead supply at this critical resistance level and get a breakout. These things are going to happen together. The relative trend is going to accelerate, scoop higher. You get a little scoop and score. It's almost like a bear trap, right, in the XLE SPY ratio. At the same time, we finally get, you know, this textbook consolidation breakout in XLE. I think that's exactly where we're headed.
No, I love that. And relative strength charts are so important. And it's a thing that we talk about a lot, which is, you know, we've been talking about the energy sector being a great trade, but we're just sitting here really waiting for this breakout. You know, once again, we've been long that sector for a while, the underlying commodities, but that's a long-term portfolio. As a swing trader, you're going to want to get into that sector possibly at a breakout to new highs. Like, this is a long-term consolidation. A lot of people go, well, I would have bought it here. Well, I bought it at 71. What are you? You're just catching a lot of chop. You would just sit in something with a lot of chop. There's other things that are moving nicely. Be in the other areas. But when this starts to break out to a new high as a swing trader, that's going to be when it moves. There's no overhead resistance for a while. You could see it possibly pop up to 120 pretty quickly. Once again, that relative strength also is telling you, because really, people can say anything about the market, where they're expecting it to go, what they want to happen, what they think is going to happen. Really, the price action tells you what's really happening. The relative strength tells you where the rotations are really heading to. Kashak, going to you next. You obviously have a great view of the markets, a fundamental angle. You've been talking about the energy sector as well for a while. Kashab was actually the first one to the shipping trade, the uranium trade. So what are you seeing now in the energy markets? Do you think it has more upside on a fundamental basis, or what are you seeing?
I think the move is just getting started. Like we are going to like 80 crossing 80. I think was the point where it's clear that oil is on its way up, and you're also seeing the confirmation, right? Like copper's heading up, gasoline has gone crazy, and if you look at the refinery stocks in the US, like all the big three ones, the MPC, VLO, Phillips 66, like all of them have just gone straight vertical. It looks like crypto or Bitcoin or something. Like even today, it's like I can't believe the charts when I look at it. It's like it's just gone straight up, and that's because I think just like we had in 2022, where we had this bull market in energy, I think 2023 was just a pause because we got way too bullish, and now it's going to come back. And the reason for that is like if you look at the long term trend, right, or the long term fundamentals. So since we had this big crash in the second half of 2014, energy has been a death sector.
Yeah.
Like 2022 was a bounce, and sure, you could have traded any number of these small bounces. Like 2019, you had a bounce. So, like, you could have traded it, you would have made some money on it. But from the perspective of the companies that are, they have their quarterly and they have to actually produce and meet their numbers, for them, it's been a struggle. Like, you can't run a business where you just have 2 3 quarters of profitability and then it's like gone, right? So they have all been underinvesting in capex. And so the thing is, like, US has seen a huge production growth, right? And that's because we had a technological revolution with shale, with the unconventional oil. Like everything just put together made US the biggest producer. And so you have seen that all these new companies have come in, they have taken on debt, they have issued equity, they have done so many deals, and end result of it is that the investors haven't made money. It's like this Warren Buffett quote saying, if I had been Orwell, right, I would have shut down the airline industry because they just lost shareholders money all this time. Like, and that's really been true. Like if you look at Canada, I mean, can you imagine that we are mining oil now, like from the oil sands? It's not just getting drilled. Like that's such a huge innovation. And you have Shell having drilling for oil in the Arctic. Like is the kind of thing you can't even imagine. And you have a world where all this technological progress has happened, but investors haven't made money. And finally, like investors have had enough, and they are like, we don't care about capex, we don't care about growth, we don't care about anything, just give us our return. And it's come to that point, and it's because of this that capex spending has been just cut and cut and cut. And whatever production growth you're seeing is because of all the money that was already put into the ground until now, right? So that's going to taper off at some point, because look, like these are all declining assets. And once you take the oil out, the well is not going to be as productive after year 2 or year 3. And after that, it's when the decline curve is really going to hit. And if you're not drilling new wells, if you're not spending on, discovering more oil fields, if you're not spending on getting that next level of growth, I think you're done. And with all this ESG movement and with this windfall taxes in the UK, where they're like 90% of your net profit until 2026 or whatever is now going to go to the government, they're like, what is the incentive for anyone to invest in production? Nothing.
Yeah,
And
well,
then,
that's part of the problem, right? It's the regulations. These companies have been burnt so many times.
yeah,
Investing, it's a high capital intensive business, And a lot of times these things don't pay off, or the government's getting in the way. So I feel like they're just kind of over it. What is the lag? I know that some of these mines can take 5 to 10 years to come online. What is the lag, right? So if they're going to finally start investing in new oil projects, how many years out until they're actually online and making money?
So I don't think they're all finally starting to invest either, right? So the Exxon Hess discovery in Guyana, that was a big thing, and now that's caught in political turmoil. And every once in a while, Mexico says they are going to liberalize licenses, and then they just go back.
Yep.
And Argentina, like the shale over there, again you have the same government problems. And Canada, which is the biggest producer after US, right, in North America. So again, you have the Alberta government and the actual federal government fighting over whether or not they should be allowed to invest in oil. So there's like a bill being passed which says if you advertise anything energy related, you will be jailed. Like the kind of woke ESG crowd, who is in government, they're just making it so that no one wants to invest in oil or invest in production growth. So I think this is a situation where you can see a long bull market in oil, just like how we are seeing in coal.
I don't think the ESG thing's a problem anymore. I think that's come and gone, and people are so over it.
Yeah, I think US for sure, but I think in Alberta it's just beginning.
Really?
Yeah, yeah,
That's
yeah. They have
that's
a
bad.
so the
Like,
Alberta governor or premier, I don't know what's the term there. So they got into a big fight with the federal government because they want to protect the oil companies, and Canada wants to phase out oil by 2030 or some such ridiculous thing. And I don't know the specifics, but like there's a big fight going on, and there's a
yeah,
big fight going on with the marketing aspect as well.
that's interesting. I think at least in the US, ESG was a really big thing. Everybody was getting involved, and it really peaked and rolled over hard in 2021. And we track the fund delistings every week. There's a new ESG fund that they're shutting down. It didn't work. They tried. So I wish other countries can look to us and use this as a roadmap and not make the same mistake. But we'll see.
I think generally that's just a problem that happens in cycles. And that's another thing I wanted to get to here too, is generally in cycles, it's going to block us out for a second, but just want to show this for a second. But, when we're looking at cycles, we're able to kind of understand like what happens, at a certain point. So for example, energy is a great example. If you have energy, and energy, let's say gasoline or oil prices are all the way at all-time highs. They're back to 2008, for example. They're hitting $150 an almost hit or something. It was way up there. Anyways, at that point, everybody's searching for oil. Everybody's trying to bring more oil online. That's what drives the cycle. And then supply starts to catch up. Now we have an oversupply. Demand starts to fall off of a cliff as we head into a recession. And then you watch it fall off completely. And then oil is in a complete bear market for years. However you want to say bear market, sure, yes, it did have rallies, but basically it was in a downtrend from 2008 all the way till really recently. 2020 started it. Now we're kind of sitting in 2020, it's the opposite thing was happening, where 2020 happens, nobody's searching for oil. Nobody cares about oil. Oil is not important to anybody at that point. People are going, oh, it's the end of oil anyways. We don't need any more oil. We're done with it, which is just a ridiculous thing to say. But once again, that's the bottom of the cycle. So you can start to understand the stages of cycles just by looking at this. Yes, this isn't a staging of cycles for energy stocks. This is just the markets in general. This is created by Martin Pring. But I'm just showing you, if you looked at possibly like stage one would be in this downtrend, they're starting to get to the point of an undersupply. Stage two would be the point where you'd want to be buying, but still it would be nobody in the world would be thinking that it's a good thing to buy. Stage three, as it's heading back up, now people are starting to get on board. And then stage 4, 5, that's that euphoria stage. So you can use this type of thing for just about all of the market sectors. And then we even have one for sectors in general. This is from stockcharts.com as well. So if we're looking at this also, you can kind of see where these would head. My banner's kind of in the way. Give me 1 second, guys. Let me get that off of there. But yeah, so basically full recession, early recovery, full recovery, early recession, market bottom, bull market, market top, bear market. You can kind of get an understanding of how you want to be positioned in these markets. And most of the time, this is how it goes. However, there's plenty of times where models like this and intermarket analysis will not tell you exactly where to go. This is where, for me, my ability to read the sentiment, my ability to understand relative strength, that kind of comes into play, and that will help me to be in the right sectors at the right times. I think now is a perfect time to get into these right sectors. Things like energy are looking really good. The industrials look good. The basic material sectors are starting to go off as well. Gold's hitting all-time highs. Gold miners are starting to catch up. This looks like a really interesting market at the moment. What I'd really want to see to get really even more bullish on inflation, which I don't know how much more bullish I could be at this point, would be silver to start really outperforming gold.
Yeah,
would be energy to break out to new highs. Copper is broken out of my levels, and now it's moving up nicely. I just see this all coming together as kind of a really perfect setup here, and I hope people are taking advantage of it. You know, I've been pounding the table on this for a while. I've seen these things, and Steve, you know, Kashop, we've all seen these types of moves in the market where everybody gets so euphoric on one sector and they think it's going to be that way forever. And then you start to see the other sectors start to catch up. That doesn't mean I'm just selling my semiconductors position or my NASDAQ position. That just means that I am open to these new things coming, taking buy signals as they come, and the possibility that we shift out of the other sectors and just into those sectors.
This is a really big move from copper. I think that's just a huge development this week.
Yeah, so we had about 3% of the world's copper supply getting taken offline. So Anglo American and First Quantum's Cobre Panama mine, right? So that contributed around 3% of supply, and then now it's off. And all of a sudden, the market is just waking up to the fact that it's off.
This
And
first Quantum, I just keep hearing about this one.
yeah, so they had a mine in Panama, which was like 20-30% of the GDP of the country. And then the government just shut it down because some people protested. And now, yeah, it's just crazy over there.
There's like there are strange idiosyncrasies with every sector, right? But you guys probably know this as well as anybody. Investing in commodities is not always easy, right? I think more than any group, energy, and like you said, it's the industrial metals too. Governments they just can't stop messing with these sectors, and I think it makes it. There's just an inherent level of uncertainty that we don't have with other sectors.
No, I agree. I mean, so commodities, I always tell people, people always come to me, they're the commodities guy. People always say that about me, and really it's like, man, I just trade macro. And there's really big opportunities sometimes in that commodity space. And most of the time, there's a lot of them there. Those opportunities can be in something like cocoa all the way to energy. However, it's very hard to just invest in commodities. I think trading as a trading vehicle, it's as good as it gets. That's as much volatility and as big of a move as you're going to see in a very short amount of time. This is why you'll hear about the dudes in the 70s. You read Market Wizards 1, for me, that was one of my favorites. I was really inspired by that to get into commodities and trade them even more heavily, especially the future space. I was enthralled in that idea of floor trading and all that stuff. And so seeing that these people made these wild fortunes and an amazing amount of money very quickly, it was something that really kind of stuck with me. So I got into it. And also I just love the idea of understanding commodities, the supply and demand. I also don't, I really don't like trading things like earnings. I really don't like being around on things like earnings because it can be very painful sometimes. It can be very hard to trade. I don't understand those things like other people might. So I don't really like those. There's certain stocks I will get into, But I also, that's just my own personal portfolio. I don't do that professionally. I have good returns in that, but I like to stick to the ETF space. Kashop is a person who kind of will be like, hey, this is a cool stock. He'll tell me the fundamentals behind it, something. I'll put it into my systems. I'll get some a technical signal, and then I'll buy and sell it based on that. But the rest of it, it's like, we were on the other day and somebody said MicroStrategy. It was Steven and I on the chart report. And somebody said MicroStrategy, and I said, can you send me the ticker symbol? Because I really don't know, like, tons of stock, tickers. Like, I mean, I know that's ridiculous to most people, but once again, like, if you ask me a ticker symbol of, China's futures market somewhere in the middle of there, or an energy market in Europe, like, I could tell you it. But at the same time, I don't know every single stock in the market, and I even don't know a lot of tickers of the big ones. I think generally you want to, as a trader, you want to just stick to what you really know well, what you're really good at. And a lot of people go, well, you trade so many different things. You must be, into a lot of different things, a lot of different areas. That must be overwhelming at times. For me, I'm not. People who trade so many different stocks, or when they trade a sector, they trade 30, 40 stocks, like that would be insanely hard for me. For me, trading all these different areas, the futures markets, the bond market, the commodities market, the equities, the crypto, the Forex, like trading those, that's fine with me. I understand how those work, but I can't dive into it any deeper. So I think there's just a difference between some people like to gravitate towards something and other people gravitate another direction.
Well, there's a refreshing simplicity to the fundamentals for commodity stocks, right? If we're talking about some tech stock or some semiconductor, a million things are going on. The demand in China is slowing. There's this and there's that, and they're not making their chips for as cheap as they used to be, and the margins are changing. With commodity stocks, you pretty much, correct me if I'm wrong, I'm not a commodity stock analyst, but I do understand accounting. There's cost of production that you have to pay attention to, and then the spot price changes. And there's little else going on.
Yeah, plus the political risk, right?
And
That's
that too. That's the hardest part for me. That's what I don't love about these stocks. Everything else is great.
Yeah, so that's where I think instead of picking the commodity as in the minor ETFs, I think getting into the actual miners, it makes sense, because the minor ETFs, they just aggregate all these different miners with completely different profiles together, and then it's market cap weighted again, which doesn't really do a good job, because market cap weighting for the S&P or a relative strength index, sure, it makes sense, but here you have something that's so cyclical, and then you're weighing it by market cap. I don't think that really makes that much sense. And if you actually look into the individual stocks, you can definitely, so these are the kind of ETFs that are easy to outperform. Outperforming the SPY or the Qs, that's really hard, but
Yeah.
anyone who's into commodity stocks can outperform COPEX, outperform GDX, outperform GDXJ, like even URNM. That's really easy. And that's because you just take a look at the stocks and you know for sure that, do you really want to be invested in some company exploring for uranium in Niger which just had a coup? Not really. Like, just take that out. It's like, it's that simple if you just do the due diligence. Like, not even couple of minutes of due diligence required to just say, I'm going to knock the stock off.
Yeah, there's a lot of crap in these funds.
Yeah, I mean, it's also really important to pick the right ETFs. That's also a thing that you do learn over time. It's very easy to start picking like very outdated ETFs with all types of junk inside of it. I try to find the best ones, but once again, there is no perfect ETF that I could look at and say, hey, it has everything I want. However, because most of them are market cap weighted, the weighting of the ones that I really would want to be involved in are in there, so I'm okay with that. And also the diversification gives me a little less volatility. So putting that all together, because I have run simulations trying to test systems of buying, hey, I'm just going to buy the ones I really think are great, the ones that are all technically showing relative strength. I have found that doing that, I've actually made less money than just buying the ETFs in some of those areas. That doesn't mean there isn't other areas, and there doesn't also mean that there isn't somebody like Kashop who could dig in there and find specific names that are great. I'm just saying that's not my strength. Not my strength at all.
What's the best gold miner?
Oh, that's a loaded question.
That's Kashap's question.
I would say Agnico,
What's the ticker?
AEM.
That's the old Agnico Eagle Mines.
Yeah.
How's that chart look? I got a couple on my list. Again, not knowing nothing about the fundamentals, just relative strength. AEM's working on a nice base. I'm going to share my screen again and ask you guys what you think about. We've been leaning into this one for a while now from a relative strength perspective. Alamos Gold has really been the one in the space that maybe you could put trades on over the past few years. We just got kind of like, is this working? Yeah. We just had like a little short-term momentum thrust. So if you look in the lower pane here, this is a 5-day rate of change. It's just a trailing week. And, we haven't seen momentum like this since, I don't know, late 2022. Happening, in a good spot. This momentum surge is coming as spot gold is breaking out, finally, of this massive base. So I think, this is a pond that I think we could be fishing in right now. Harmony is another one that looks really good.
Also, New Gold, NGD, looks very similar to Alamos.
Yeah, I always enjoy the conversations with Kashap on this stuff because I think the thing that I have learned is that sometimes Kashap will have a view on something, and I think that's generally with all traders. Your views can always be more longer term, more shorter term, however it is. But Kashap always has a really good way of understanding the fundamentals, and also nowadays Kashap really does have a good way of understanding the technicals involved as well. And I think that's also just strengthened your trading a lot because it's hard to navigate when trends are persistent and they're very hard to get out of the way of. And I think being able to understand either, for me, I feel like my fundamentals are more based on fundamental positioning, sentiment, and so on. And then just being able to marry the two together and kind of understand when I should get out of the way of something or stay in the way of something, like that also helps. So I think it's been good over the years to learn from Kashap, his angles, as well as my angles. And I think we usually tend to find a lot of good stuff because of it.
Yeah, I think it's the same. Like, I have learned so much from you. Like, when I first read Bollinger Bands, I was like, this makes absolutely no sense to me. I read the book cover to cover and I did not understand one word of it. Then I went and read Martin Prink's technical analysis, explained like all the easy stuff. And then I finally got back to Bollinger Bands, and then I realized, okay, this makes perfect sense now.
Yeah.
And I've sort of started to incorporate that into my own trading. And it wasn't easy because the first time you read about statistics, and I have done an MBA, I have done 2 courses on statistics, but when you apply statistics to trading, to price series, it doesn't click in my brain naturally. And I think that's true for a lot of people. Like, I know a lot of people who just say, let's take the golden cross or the death cross, just simple moving averages and we are done. And I mean, that's also where I started, and it didn't make sense to me. But then once I understood oscillators, once I understood things like band squeezes and just things like trend lines, and especially horizontal trend lines, and looking at volume by price, those sort of made a little more sense to me. And now I kind of get why you need to use technical analysis, right? I came from the camp where all I did was fundamentals to now realizing the importance of technicals in trading. Like, you can definitely look at sectors on a fundamental basis, but if you don't look at the technicals, then you're just not going to make money, right? You're going to sit there and be miserable and think there's something wrong with the market, and there may be something wrong with the market, but the point is not to get hurt by it, right? And that's where I think technicals really help.
I love the Martin Print shout out. I think he's one of the more underrated technicians. I spent a lot
I do
of
as well.
reading
I
his
love
work.
Crane.
Yeah, he's great. I don't know the name of it off the top of my head, but he's got this big old thick book that reminds me of John Murphy's like Principles TA book. It's like a textbook. It's one of those TA textbooks. It's as good as it gets. And he's still writing on stock charts.
Yep. Technical Analysis Explained is Pring's book. Yeah.
That's it. Yeah, the thick one, right?
Yep.
That's a good one.
I got them all.
Beginner technician. That's at the top of the list. And John Bollinger, amazing too. This is how we use the Bollinger Bands. What do you guys think about this?
I love this. I mean, for many, number one, understanding this, a band squeeze is incredibly important. And I think in general, one, I think people look at this and they're like, wait a minute, this isn't an oversold or undersold oscillator. It doesn't work or something. That's a stupid indicator. This is not at all what that indicator is. What a band squeeze indicator is when volatility is low, you're going to be at that lower end of the range where Goldman Sachs is today, where that red circle is. And then when the volatility is really high, like in the crash in 2020, that's where it's all the way at the other end of the range. So it's not an oversold indicator at all, but it tells you how wide the Bollinger Bands are, which tells you how much volatility has expanded. And the best thing that, you learn as a trader, especially range expansion has been around forever. And the thing that all the old guys would always say to me is, high volatility leads to low volatility leads to high volatility. Yep. Now Goldman Sachs is at a low volatility range, and the sector looks pretty good, right? I'm long the sector. I should know this off the top of my head, but I don't look at things on a day-to-day basis. But the sector is looking pretty good. Everything's been holding up pretty well, and then Goldman Sachs is in a band squeeze. That's telling you a lot.
The big banks have really been working. This one's just still stuck here. Like one of my favorite just market aphorisms: from contraction comes expansion, right? So this doesn't have to happen tomorrow, but this is a historic volatility squeeze for Goldman. Once this thing finally moves out of the super tight range it's been in for 2 months now, you're going to get a big move. I don't know what direction it's going to be in, but you simply follow price. When it happens, it's probably going to be a big move.
Yes, and that's the thing I like the most about the band squeezes is, I have my system that I get most of my signals from that I use across every asset class, equities, commodities, currencies, crypto, whatever, is the band squeeze breakout. Yeah. Basically here, looking at this, when that price would hit the top Bollinger Band, that would tell me that it's time to buy. Now, once again, band squeezes can't tell you direction. So because they can't tell you direction, just like that red arrow goes down and the green arrow goes up, you have to kind of understand either direction. You should follow it. It could go down. That could tell you something. It could go up something. But really,
yeah.
Go ahead.
That's where the underlying trend can really help you. Right? Like using Goldman, sure, this could resolve lower, but
I'd be surprised.
It would tell me gun to my head. Which way is it going to go? Up. Why? Because, patterns tend to resolve in the direction of the underlying trend, and that's up right now. Also, you got this big level here. This could be a pretty nice longer term breakout.
And then also too, is you wanna also understand when you do see that breakout one direction, if it does break out to the upside, you also want to see volume confirm it. So if you see a nice high volume bar on the day it breaks out to the upside, especially if there's no news, for me that's the ultimate setup. No news, breakout to the upside, high volume is telling me that people are buying. There's a reason that's coming up and it just hasn't come out just yet. That's kind of the ultimate setup across all asset classes, across everything, to tell you that that market is going higher. Gold even had one recently, that breakout on that day, there wasn't much going on. Granted, I have many thoughts and feelings and stuff about gold at the moment. None of those matter. The thing that matters is it broke out to the upside. There's good volume on that day, and it happened with relatively little news about gold. So I think that's going to be a sustainable trend, whereas a lot of these false breakouts in gold in the last couple of years haven't been. So it could be a very interesting market there. But once again, I'd love to see that setup. I think that's what people could be looking for if they are looking to buy something like Goldman, is that breakout from this zone. I mean, that's a beautiful band squeeze. Breakout higher, get above the old highs, get some volume behind it. That could be a monster.
I was talking to a Wall Street Journal reporter, and he kept on saying, using the phrase technical breakout. And finally I said, what do you mean by technical breakout? He said, well, it's just the technicals. There was no news, there was no earnings. I had to laugh like, oh, so a technical breakout is when price goes up and journalists don't know a good reason for
it. I mean, but at the same time, I will say, you know, that's the thing that I learned in Market Wizards 1, Bruce Kovner. He talks about that, the US dollar to the Canadian dollar.
Is he your favorite market wizard, Jason?
Kovner? God.
Yeah.
Probably. Michael Marcus is probably my favorite story. Favorite trader is probably Bruce Kovner. I probably bring him up way too much. And not to mention, my memory is pretty crazy to the point where I can quote most of the things I've read. So I just will sometimes just spit it all out at once. I'm sure you've heard me bring it up a million times.
And both of those guys are in the original.
Yes, both Market Wizards 1. And in Market Wizards 1, the US dollar, and this is my favorite story. I post it all the time because it's the most important thing I've ever learned in trading. What he basically is looking at, he's looking at a triangle. So you see a triangle, the market's both coming. It's hard to see because I'm mirroring my camera. The market's all going one direction. It's coming into a triangle. So volatility is squeezing tighter. And then it breaks out one way or the other. And he says, well, he could have made a fundamental case why it should go up. He could have made a fundamental case why it should go down.
Right.
However, he had to go with the way of the breakout. And, you know, Jack Schwager is kind of confused. And he goes, well, I could have made the case for this. And he goes, yeah, of course, I could have made the case for either side. I could have had more conviction on one side or the other, sure. But at the end of the day, it was kind of a toss-up. And he's like, you kind of have to go that direction. And especially when there's no news on it. And then what did Schwager asked him about traders? And he said, who's a great trader? And he says, Russia's a great trader. The Soviet Union's a great trader. And you're just kind of like laughing about it a little bit, you know, and Schwager thinks it's funny. And he's like, no, like, seriously, you don't know who's buying at that point. Sometimes there's people who are in the market that you have no idea. None of us are big enough to really move the market like that. But there are people who know something a little bit before us, and that only will show up in the price action. It will not show up anywhere else. They're not going to say, you know, a country isn't going to come out and say our position in this pair or something, or this bond.
Close to closing it out.
Yeah, if they do, they're close to closing it out just because they want, you know, a nice spike to sell out to, you know, to sell out to us plebs. You know, that's basically how that goes. So yeah. I think that was the thing that always really spoke to me, the way he kind of married the fundamentals of technicals and could look at the price action. Because I don't really see price action like I'm just seeing like the price action. I'm seeing people, I'm seeing market participants, I'm seeing supply and demand. I'm seeing all of those things in the price action most of the time. He was the first person to really kind of explain it in a way that I understood.
Is that the best market book? You had to pick one. That's it. That's got to be it.
It's a tie between Reminiscences.
Right.
Yeah, it's really a close tie between Reminiscences of a Stock Operator and that.
But it's one of those and not the textbooks, because just like anything, or you know, if anybody who went to college knows what I'm talking about, there's theory, which is the Martin Pring book and the John Murphy and everything else, and they're so important. But then there's practice, which is very different. So hearing these guys who are actually like, you know, in the trenches doing this every day, talk about their experiences, I think that's just more valuable than anything else you could read.
No, I agree. And that's the Reminiscences is to me will always be a great book, considering just like basic mental health, you know, like basically understanding my own mental makeup and things, and seeing somebody that couldn't really get it under control. And I think that's really important to just understand, like, how do you put that discipline inside yourself? And especially your trading, like maybe your life will get crazy and out of control at times, but how do you keep that discipline in your trading so you're never in that position where you're making moves based on feelings, assumptions, what's going on in your life, what you're mad, what you're happy about. I think that happens so much in trading, especially to new traders. I've seen so many traders blow up over the years. And most of the time it's never because they made the wrong trade. It's because they're holding on to something, because they're feeling some way about something. I mean, how many people, here's a great one. How many people do you know that come to you and are like, hey, I think the only way for me to really get out of this is to trade. I need to make money. And once I make this amount of money, everything will be fine. And it's like, when you do that, you put so much pressure on yourself that your position sizing, everything goes right out the window. You start to try to take on trades that you shouldn't be. You start to do things that you shouldn't do. It's a recipe for disaster, and I hear it all the time because it's like you're thinking of, this is going to change my life, so I need to escape. So how do I escape? I'll escape by doing blank. I'll escape by taking this huge position. I like oil today. Hey, instead of me having good risk management on oil, I'm just going to take all of my account, as much leverage as I can, put it in oil, and in 3 days I'll move to Hawaii. It's like that's the stuff that kind of gets in our head. I think it's just human nature. I don't think it's anything abnormal. I think it's just what we do as humans sometimes. So I think getting that stuff under control, reading a book and understanding that that's the biggest thing that you could ever do as a trader, that's the most important. I don't think how you trade is nearly as important that. I don't think you're running technicals, fundamentals, whatever you want to do. I don't think any of that's nearly as important as keeping your own mental health in check and not going on tilt, so to say.
It's so important because a lot of like market people really admire this guy or look up to this guy. As great of a trader as he was, his life was a disaster. It's not a sad story. This is a downright depressing, awful story. And we look up to him, oh, he's such a great trader, he's great this. That's a book of what not to do.
Yes.
Great quotes in there. Sure. How many times did he make a ton of money and then blow his account up?
Oh, countless.
Like, just stop doing it.
And it's once again, it's the greatest story ever for me because it tells you what not to do so much. And then not to mention, it's like when your whole life is wrapped into something, and I know it, like riding BMX bikes, my whole life was wrapped into it. I loved it so much. It was all I could do. But when I was hurt, I was the most miserable person on earth because I had nothing else and I didn't want anything else.
Yeah.
And I think generally, like, it's why, like, if somebody is like, hey, I want to trade for myself, start another business then. Make sure you have some form of income, work a job while you do it, whatever you want to do. Like, do not put that pressure on yourself as a trader, because most of the time you will blow up. I think the smartest thing I ever did was consistently figure out ways to keep money coming in so I could keep my accounts just as my accounts. I even look at them like they're things I don't touch.
Right.
They're just assets that I have. My accounts I don't touch. It's grown a lot over the years because of that, and that's only because I've kept it that way. I'm sure at some point, if I was not working and stressed out, I would have blown it up. If I didn't have the savings, the other businesses, the other things that I have going on, the investments that I have, like, I'm sure I would have done that because that's what we all do. We do that. So I think what we're talking about here is great. And I think that people should read that book, not idolize it. There is tons of market wisdom in there. The most market wisdom I've ever gotten in my life is probably from that book. But it's also, as Steven said, things not to do. Because the guy ended up in a hotel room and he shot himself at the end of his life. I think it was shooting himself. I can't remember what it was, but he ended up killing himself.
That was at the very end, right? So he had a little money stashed aside, and he told his wife never to give this money to me. That is, if I blow up, that's it. I'm not going to put this money back in the market. And then he talks to her, and she gives him that money, and then he blows that up, and then he commits suicide. So that was tragic. Like, as any gambler knows, like, you have to have your safety stash, and then he just goes and blows that up anyway, and that's all to do with the emotions, right? It's not the logical part. The logical part of your brain knows not to do that, but the emotional part just completely overpowers it.
Yes, and I think that's the real lesson in it is, one, understanding risk management and looking at the money in your account like it's money. Like, that's a thing that I think people don't do nearly enough. Is like, if you wake up, like, too many people, for example, Bitcoin. If I talk to somebody who's invested in Bitcoin for a while, they'll be like, oh yeah, if it gets cut in half, it's whatever. I started investing in it when it was $10,000, and now it's $60,000. Like, even if it comes back to $12,000, I'm okay. It's like, wait, so if you close out that position, that isn't real money? Like, it's all real money. So you have to figure out how to trade in a way that you look at it every day like it's real money. You have $10 in your account, $1 million in your account, whatever it is, it's all real money. And your goal as a trader is to avoid those drawdowns because, like we know, once you get to a 50% drawdown, you have to make 100% to make it back. If you keep your drawdowns low and you can have those big returns, like, you will make a ton of money over time. But I think that's the thing that people don't understand either, is that when you're in those drawdown periods and you're pretending like it's not even your real money because, hey, I bought it 10,000 and I don't care if it goes back to 10,000, I got out with what I got in, you're missing the point. And I see that a lot in retail traders, a ton. You really have to understand that there is no such thing as that. Your money is real money, and as long as you can cash it out, it's real money. That's it. So, figure out your risk management. So figure out your position sizes. Figure out how you get out. Like, if you, like Kashab and I talked about it recently. If you're buying Bitcoin, we got our buy signal around 20,000. This last one, yes, I've traded 3 cycles in Bitcoin, at 4 cycles now at this point in Bitcoin. I've been in and out of it many times. This last one was from 20,000. If it gets back down to about 60,000, it would hit my stop. So for my swing trading position. So if it hits 60,000, I'm going to get out, and then, I'll get back in when I get a new buy signal. But however, my drawdown will not be anywhere near where I initially got into the trade. That would be ridiculous. It's real money. So think of it like real money. So Steven, are you still able to stick around?
I got to wrap this thing up. I have a call right now.
Okay. Cool. Oh, I see your message. Okay, so you go ahead, Steven. Kashap and I'll stick. Thanks for joining us. And Kashap, you got a little bit more time?
Yeah, sure.
Cool.
This was cool, guys.
Yeah. Please come on anytime. I think this is going to be the format. I'd rather get on here, do it through the StreamYard thing. It's a lot of fun. I think a lot of people get more interaction from it too.
Well, and we can share charts. This is great. All right. See you guys next week then. Have a great weekend, fellas.
All right. You too. So, Kashap, let's go through these cycle charts.
Sure.
So, basically, the other day I wanted to have this conversation too. The other day somebody asked a question and actually wrote me kind of a nasty message about me talking about being in early inflation, and a bunch of people actually made comments on it. I thought I wasn't really. Number one, I'm just sending a tweet. I'm not sending expert analysis. So when I'm sending a tweet, I'm not sitting there saying exactly everything that's going on. But what was the point in that was that early inflation, what it means is, as we just started to get into this cycle. So early inflation, we're just getting into this cycle now of inflation. There's cycles within cycles. So the long cycle, yes, if I say the primary trend of a cycle of inflation has started in 2020, that's accurate. That's what I really do believe. I think there will be waves of inflation. I've talked about this many times. Inflation will come in and out. And also, if you go to my YouTube, you can see I actually made 4 videos on how to look at economic cycles. So if you guys want to learn how to look at that, those videos are great. So if you're looking at the primary trend of the cycle, yes, inflation has been the primary trend since 2020. In 2022, that kind of died out in Q1 22. That came the other direction. Even the bonds started to tick up for a little while at the end of 22, which they ended up giving that right back. And now getting into this year, we're starting to see the commodities start all over again. This is what I mean by early inflation. I'm just trying to say that there's always cycles inside of cycles, and in a bull market, you will see lots of rotations. So I'm saying early here, now that CPI is ticking back up a little bit, now that we're starting to see some underlying inflation come back up. Kashab and I know that inflation has been under the surface the whole time, but let's just talk in terms of what the Fed is actually thinking. So as those are starting to move back up, now we're seeing this shift into different sectors. This is where a chart like this comes into play, where we start to see shifts into some of these other sectors that usually come in at the overheating period of the market. Meaning, by overheat, what I mean is 2022. So 2021 is where I think we're kind of at. If I was to, I don't like analogs, but if I had to say analog, 2021. So if we look into 2021, we start to see this move in the market. We start to see energy after the election in 2020 start to be a leader. Financials started to be a leader. Tech started to be a laggard. That's where I think we kind of are in the cycle at the moment. I think we'll start to see those things kind of leading the way. But that ends up putting a lot of pressure on the market. This is where we're looking at here. It says full recovery. That's really when everybody's going, everything's fine, everything's great. The market is flying up. And then we start to see inflation start to overheat again. This is when they usually start to raise rates if inflation gets to that point. Now, I don't know where we're at exactly right now, but I'm just saying that like I'm talking in Fed terms. I don't know where we're at in Fed terms at the moment, but I am saying where we're at in sector terms looks right for this. It looks like the reflation trade is taking out. Those are sectors like basic materials, industrials, financials can do very well in that environment, and energy can do very well in that environment. Most of the time, what you'll see in that type of environment, if we do, this is the warning signs you should be paying attention to. You'll start to see industrials and financials become laggards in that environment at some point. If they do become laggards, that's starting to tell us that we're going from that reflationary environment to a stagflationary environment. Stagflationary is very different. That's when you start to have too much pressure on the market. The market starts to get hit in many ways, and there's a lot of pain that will come into play. And so when you start to see that pain in the market, that's when we'll start to go, okay, well, maybe we're overheating here. I don't think we're anywhere near overheating just yet, but I think we could get there. So trying to just explain the cycles here, I think is really important. And generally, like what I'm talking about, I'm not looking at this as current, as we're right here. This is just a chart I grabbed. However, it is telling me like that is kind of where I'm thinking we're at. We're starting to get out of stage 3 into stage 4. So really stage 2 is kind of that stage where you see tech, even bonds usually kind of go up, but they didn't do very well this time. There's too much inflation under the surface, I think. They were also raising rates when the market was trying to do that as well. And then you're starting to get into stage 3. This is where we start to see that reflationary environment start to come into play. I think that started at basically the beginning of this year. Started to see oil, energy, started to see political unrest in certain areas, started to see certain things that kind of push us into more commodities. And as that starts to overheat, those sectors that we talked about earlier, like industrials, basic materials, energy, financials, start to be the leaders. So what I'm looking for here is kind of those to start leading the way again. I think Kashap also will have something to say about some mining stocks. I'd love to talk to Kashap about the copper miners as well and see what he's thinking on that. And I'm sure some of you guys would like to hear that as well. So Kashap, those areas that we were talking about, what are you seeing there that you like?
So I love this chart that you just put up. So it just reminds me of, analogs are never perfect, right? But if you look at the 60s and 70s, you saw this similar kind of situation wherein inflation accelerated towards the end of the 60s, and somewhere around 74 to 76 you had this fall in inflation, fall in commodities, and stocks and bonds, like they did really well for a period and people thought it was over. But it was like the second wave of inflation was just beneath the surface and it just took off, and then you had that major bull market going all the way to the blow off top in 1980, right? So I think it's something similar to what we are seeing today, where 2023 was a cooling off phase where all risk assets could perform well and it looked like inflation was under control, and everyone sort of thought, okay, maybe this is it, and we get back to normal, which means how things were in the previous decade. Where, do you remember there was this time where all these Fed governors would say inflation is too low, we have to do something to get inflation up to 2%, and the deflation is killing the economy and things like that. And now it's like just a complete 180-degree turn. You got too much of what you wished for. And I think when you say this is the start of the inflationary cycle, I think you're right on point. This kind of is like the 1976, 77 kind of situation where inflation is, it's not that inflation hasn't been around. It wasn't like inflation wasn't around since the 60s, right? It was.
Mm.
It's just that we got used to a period of relatively slower price increases, and now we are going to really start to see that accelerate. And I think that's the environment. So here's the thing with tech, right? Like this is where I get stuck, because if you study cycles in the 60s or 70s, tech was a big part of the innovation that was happening, but it was not as big a part of the economy. And
Mhm.
especially if you look at US tech is not just a big part of the US economy, it's a big part of the world economy. So you never had a situation where you had these few companies dominating the entire world, and you have that landscape today. So if inflation picks up, or inflation is picking up, so does tech really do badly when inflation picks up? I'm not very sure. Maybe you see rotations within the tech industry. Maybe instead of platforms and semiconductors, you have outperformance in cybersecurity or cloud or something else. But I'm not sure whether tech as a whole is going to have a bear market just because we are going to enter a bull market for commodities. So that's one point. And specifically on copper, I think it's like it's very clear now that copper's entered a new bull market. There's no arguing with the chart, right? It's kind of like trying to argue with the breakout in Bitcoin past the 28 to 31K range. Like, sure, you can have views about it, but it's as clear as it gets that copper's headed higher, and the move above 80 in oil. So the funny thing about the move above 80 in oil is OPEC came out and said consumption is not going to rise more than they previously forecast, and oil still went up. And in any other market, you would have seen oil go down at least slightly on that news, and it just went straight past 80, and it didn't even stop at 80. It went straight to 81. And that kind of shows that people are starting to realize the inflation trade is back on. And so here's the thing with this market environment, which is everything happens so fast. So last year, the Russell made its biggest move from a 52-week low to a 52-week high in its entire history. And when the Fed announced they're going to cut rates, November, December, Jan, Feb, like we had 4 straight months of rally without even a pause. Like usually what happens with crypto especially is first Bitcoin picks up, then Ethereum picks up, and then you have all the other small cap coins. They start to attract attention, and that happens because people in Bitcoin and Ethereum go lower down the chain, that they go from the large caps to the small caps. And now what you're seeing is Bitcoin's picking up, Ethereum's picking up, the middle layer not so much, and the meme coins are picking up. Like what you see at the very tail end of a bubble, those coins are picking up, whereas the middle has been kind of left out, which is just a very weird situation. So I really shouldn't even be using historical analogs, because I'm not sure if historical analogs will hold for this cycle. Everything just feels different. And that's also because I think now we have a lot more market participants. It's easy to backtest, it's easy to look at history, it's easy to do the kind of thinking that was little harder 5 10 years ago. Like now it's a lot more competitive, markets move incredibly fast. So I think the cycle is just going to be very very surprising, even for people who have lived through quite a few cycles.
No, that's a great point. And analogs, yeah, they drive me crazy. But at the same time, I do think it's important to understand them, understand the cycles, go back, look at it, understand how the market moved around those times can be helpful. Like bonds, for example, that was spot on. Like basically bonds, you can understand the big macro things, but trying to figure out the way the sectors are going to move inside, which stock is going to do, like that's not going to show up. This is why I think it's always important to understand where we're at and understand like, hey, what is early? I'm not going to take it as, hey, this is going to be inflation just like the 70s, so therefore I'm going to trade it and just hold oil for the next 10 years. Like that would be insane. That wasn't even a good move then. But what you could do is understand where you're at today. So, as a trader, you're trading tactically. We're not just holding things for the next 5 years. So, 2020, coming out of that 2020 bottom, we're holding things like tech, semiconductors were leaders. Some of those areas did really well. And then as we move forward, we're moving into things like after the election, energy and the reflation trade took off. And then 2022, we had the overheat at the beginning of the year, and then all the commodities fell off a cliff. The market fell off of a cliff for the rest of the year until October 22, when it bottomed. And then once again, we go back to the beginning of the cycle. We're in technology and so on. And the only way you can really tell those turns and understand those turns is really by looking at the relative strength, looking at the charts to see how the intermarket analysis is all coming together. And that's the only way to really trade that tactically. We're not buying holders. Like, people who are traders really have to understand that. We're not people who are buying and holding things. We're trading. So for me, I'm always going to say, hey, it's early in this part of the cycle. Yes, I could say the inflationary trend has been up since 2020. However, I wouldn't have done very well just trying to buy and hold that for the last 4 years. So as a trader, I had to understand there was a point to get out of the commodities trades. There's a point out now, which has been going on. Some of the, like, obviously there's always some ones that are outliers, like cocoa, orange juice last year. Some of these things also did well, but now we're looking at more of a broad commodity cycle, meaning copper's in a buy signal, oil's in a buy signal. I'll actually go through some of the positions because I think this will be enlightening for people, because there's so many positions now in the commodity space in the futures portfolio, and most of them are just longs. It's pretty crazy to look at sometimes, because I don't always think I'm just going to see a bunch of longs as I'm looking at my portfolios, but that happens sometimes. We're looking at cocoa, obviously a long. We're looking at gold, silver, copper, lumber, gasoline, feeder cattle, live cattle, lean hogs, orange juice is along again. The energy sector, the heating oil, crude oil, cotton, like I could go on. Like, there's tons of longs going on right now in
Did you
the
get
commodity
corn
space.
yet, or is it still waiting on that one?
What do you say?
Did you get a signal on corn, or is that still?
No, I'm still waiting on corn. Soybeans, though, I forgot to say that because that's one I left off on. Soybeans also has a long signal. Corn is very close to getting a new buy signal. So, and most of the time what we're seeing in corn isn't really to do, and the grains complex in general isn't to do as much with the grains being a bad investment. It's more to do with the fact that cattle prices are so high. It's putting so much pressure on that market that it's showing up in corn, soybean meal at the moment, which is putting major pressure on that market. However, that's going to shift at some point, and this might be the time it starts to shift. We've looked at, drought in Brazil and all of these. They basically have acreage has continued to shift into different areas away from the grains, because that's what they do so they can make more money. So they continue to shift acreage away from the grains, meaning we're going to have an undersupply of the grains. I mean, literally, it's endless reasons why the grains could be really good here. Not to mention, what we keep pointing to at the newsletter is that we have extreme commercial buying. Commercial buying in itself means nothing. Extreme commercial buying, all-time highs in commercial buying. That's when we're going to start seeing some major trend changes. And so this could be that shift in the grains complex. So that would be the only thing that's really lagging at the moment. If I look at just commodities in general, like, the only thing that's lagging at the moment is the grains complex. And so if those start to catch up, that's it. That's the last of them. Copper, is breaking out. We talked about that. Palladium is very close to new buy signal. I just talked about that yesterday. Lean hogs has been in buy signal for a while. That's been doing great. And we're also getting into a very seasonally bullish part of the year for lean hogs as well. That starts in April. So, you know, we're already long it. We're not going to change that because of that, but we're still long it. If you take shorter term trades, that might be something you look for as well. The energy complex, man, like, you know, like if we just look at the energy complex alone, and you know that just like I do, the energy complex makes up so much of the CPI, the CRB index, all of these things that people look for inflation. So really, that's the reason why all this was building under the surface and nobody was saying anything. Everybody's just looking at things like the CRB and going, okay, well, that's falling to new lows, or that's been in a range for so long. Therefore, the energy trade is dead and commodities are dead. None of that was true. It was all very live, very well. And just kind of building under the surface. That's why I kept saying, like, you know, if they ever stopped with raising rates, if they ever paused, if they ever did anything, it would add so much fuel to inflation. It might not stop again. Now, once again, this is early innings. I'm not sure of that. I can't say 100%, hey, this is it. But I know that even if we hit our stops on most of these positions, we would be well into profit. The trades are all working out really well. So once again, we're just holding them. We're riding the trends, and we'll see where it goes. But Kashop, let's end there. I think that was fun.
Yeah, definitely.
I think we had a really good time. Let's see if anybody had any questions before we go. Nick brought up a great point on Jesse Livermore's life. Dave, thank you for joining us again today. You were always great. Thanks for posting the charts also on Twitter. And then Jeannie, thanks for joining us. And I don't see many questions, so we'll just end there. All right, guys. Thank you all for joining us. This was a lot of fun. We have a weekly show on Wednesdays. We also are randomly meeting whenever we can. So thanks for joining us. Thanks, Kashop, for joining me as well. And you guys take it easy.
Thanks, Jason.